A new federal banking regulation just went into effect. And before you keep scrolling, let me be very direct with you. This one is different. This isn't the kind of policy change that only affects corporations or wealthy investors. This is something that could impact how you access your own money, how quickly your deposits clear, whether your transactions go through, and whether your account stays open at all. Most people are going to find this out the hard way. You're finding out right now, which means you still have time to do something about it. Before we go any further, if you want to stay ahead of banking changes and financial rules that directly affect your accounts, subscribe and turn on notifications. We cover exactly this kind of news, the kind most channels ignore until it's already too late for the people watching. Let's get into it. The Financial Crimes Enforcement Network, known as FinCEN and operating directly under the United States Treasury Department, has just finalized an updated version of what's called the Customer Due Diligence Rule. On paper, it exists to fight money laundering, fraud, and the financing of criminal activity. Those are real problems that genuinely need addressing. But the way banks are being required to implement this rule is creating a very different reality for everyday account holders. And that reality is one where your perfectly normal financial life can suddenly look suspicious to an algorithm. And the consequences of that can hit your account fast without warning, and at the worst possible moment. Here's the thing about modern banking compliance systems that most people never think about. They're not operated by human beings sitting at desks and making judgment calls. They're automated. A piece of software monitors your transaction history, builds a baseline model of what your financial behavior looks like, and then watches every new transaction against that model. When something breaks the pattern, even for an entirely innocent reason, the system flags it. And once it's flagged, your money goes into a review process that you didn't ask for, didn't cause, and have no control over while it plays out. That's the mechanism. That's why ordinary customers are suddenly finding themselves locked out of funds they have been depositing for years. Not because of wrongdoing, not because of suspicion in any meaningful sense, because the software decided something looked different from usual. Think about the kinds of things that can trigger that kind of flag. You sell a car and deposit the cash, you receive a larger tax refund than last year. A relative sends you money to help cover an emergency. You land a new client and your income jumps for 1 month. You pull savings to make a down payment. None of that is suspicious. All of it can get your account put under a hold while someone in a compliance department works through a queue that might be days long. Now let's talk about the specific things that have changed under this updated rule, the parts that matter most to people with ordinary bank accounts. The first and most significant change involves how banks verify account ownership and the sources of funds coming into those accounts. Under the updated framework, banks are required to document and verify who controls any account that receives income from business-related sources. You might be thinking that doesn't apply to you because you don't have a business account. And for some people that's true, but the line between a personal account and a business use account is much thinner than most customers realize. If you freelance and client payments land in your checking account, that qualifies. If you drive for a rideshare app and the deposits hit your personal account, that qualifies. If you sell products online and transfers come in from Etsy, eBay, or PayPal, that qualifies. If you receive payments from multiple different sources rather than one regular employer, your account looks like a mixed-use account to the bank system. And mixed-use accounts are being pulled into enhanced verification requirements that simply did not apply to them before. What does enhanced verification actually mean in practice? It means your bank may send you a letter requesting updated identification, proof of your address, and in some cases documentation explaining where specific deposits came from. Here's the part that catches people off guard. If you don't respond to that request within the window they give you, usually 30 days, your account can be restricted. Not closed, not penalized in the traditional sense, restricted. Meaning the money is still in there, technically yours, but completely inaccessible. No withdrawals, no transfers, no payments going out. Have you ever had a bank hold your money or question a transaction that was completely legitimate? Tell me in the comments exactly what happened, because what you experienced might be exactly what a lot of people watching this are about to deal with. The second major change involves transaction monitoring, and how aggressively banks are now required to flag anything that looks unusual for your specific account history. This isn't new in concept. Banks have always monitored for suspicious activity. What's new is the sensitivity of the calibration. Under the current framework, banks are under pressure to demonstrate that their monitoring is working, which means their systems are set to catch more. And catching more means flagging more, including a much higher volume of transactions that are completely routine for the people making them. Here's a practical example. Say you've had the same job for 3 years and your bi-weekly direct deposit has been consistent. Then your employer pays out a bonus and your account gets $4,000 in a single week instead of the usual $2,000. To you, that's a bonus. To the monitoring software, that's an anomaly worth investigating. The deposit might be held for several business days while the bank's compliance team reviews it. They might call or send a notice asking for documentation. If you're not expecting it, if you don't have the paperwork ready, that hold extends. And while it extends, your bills keep coming due. The third change hits people who deal with international transfers regularly, and it's substantial. Banks are now required to collect much more detailed documentation on the purpose and recipient of any cross-border payment. Wire transfers that used to clear in 1 or 2 days may now take 3 to 5. If the explanation you provide doesn't satisfy the bank's compliance review, they can decline to process the transfer entirely. For anyone who sends money to family abroad or who pays international contractors for freelance work, this creates new friction and new delays that need to be factored into financial planning starting now. The fourth change is one that most coverage of this rule completely overlooks, and it involves fees. When a bank requests updated documentation for compliance purposes, they give you a deadline to provide it. If you meet that deadline, everything proceeds normally. If you miss it, and people miss it because the notice looks like a junk mail, or goes to an old email address, or gets buried, some banks are now assessing monthly fees ranging from $25 to $75 while the documentation remains outstanding. That means a letter you didn't realize required action can start costing you money quietly month after month before you ever know the clock was running. The fifth change affects new accounts and large transactions specifically. Banks are now extending the period before a newly opened account has full functionality, often requiring between 3 and 7 business days of verification before the account can be used normally. For existing customers making large or unusual transactions, similar waiting periods are being applied. If you need to wire $50,000 to close on a property or transfer a significant sum for a major purchase, expect the possibility of a temporary hold while your bank confirms the transaction is legitimate. If you're not prepared for that delay, it can absolutely derail a time-sensitive deal. Where are you watching this from right now? Drop your city or your country in the comments. I'm always curious how far this kind of information reaches, and it helps me understand what banking issues matter most to the people in this community. Now let's talk about what these restrictions actually look like in real life, because the mechanics of a compliance hold are not intuitive, and understanding them in advance is the difference between a minor inconvenience and a cascading financial disaster. The most important thing to understand is the silence. When your account gets flagged, you usually don't know it right away. The system marks it for review. A notice goes out through your bank's contact channels, and you go about your day assuming your money is where it's always been and available as it's always been. Then something fails. A payment is declined, an auto pay bounces, a transfer doesn't go through, and you start making calls, getting transferred, and eventually learning that your account has been in a compliance hold for however many days it's been since the flag was raised. Every day of that hold is a day your bills are still due. Auto pay rent that bounces generates an insufficient funds fee from your bank and potentially a late payment fee from your landlord. Utilities that don't process generate interruption fees or reconnection charges. Phone payments that fail generate late fees. By the time a 4-day hold is resolved, a customer who is living on a reasonable monthly budget with no financial trouble can be looking at $200 or more in cascading fees, all of it traceable back to a single automated flag on a transaction that was never actually suspicious. And here's the part that deserves very serious attention because most people don't know this exists. Every compliance flag on your account leaves a record. When the review clears, when you've provided documentation and the bank has confirmed everything is fine, the restriction is lifted, but the flag remains in your account history. One flag by itself is generally not a problem, but if your account accumulates multiple flags over time, even if every single one of them was innocent and every review resolved in your favor, the cumulative picture can lead your bank to classify your account as elevated risk. That classification affects how your future transactions are handled, how quickly your deposits clear, and potentially whether your bank decides to continue their relationship at all. If a bank closes your account, even if the reason is purely compliance related rather than any actual wrongdoing, that closure can appear in shared banking databases that other financial institutions use to screen applicants. Opening a new account elsewhere becomes harder. In some cases, people end up unable to secure a basic checking account because of a compliance history built entirely from innocent transactions that happen to look unusual to software. Clearing that kind of record takes significant time, documentation, and a persistence that most people don't know they'll need until they're already deep in the middle of trying to untangle it. So let's be very clear about what you should be doing right now before any of this reaches your account. The single most important action you can take today is verifying that your bank has current contact information for you. Go into your online banking right now and check your mailing address, your phone number, and your email address. If anything is outdated, if you moved and never updated your address, if you changed your number and your bank still has the old one, update it immediately. Compliance notices go through these channels. If your bank sends a documentation request to an address where you no longer live or to an email account you don't check regularly, you won't receive it. But the 30-day response clock starts running the moment they send it, not the moment you read it. If you have any kind of business income flowing into a personal account, don't wait to be contacted. Call your bank, speak to a representative, and ask directly what documentation they need from you to satisfy current federal requirements for customers with your account profile. Gather everything: your identification, proof of address, records of your income sources, and provide it before they ask. A customer who has already supplied compliance documentation is processed very differently than a flagged account sitting in a review queue. If you're planning a large or unusual transaction, a major deposit, a significant wire transfer, a large withdrawal for a purchase, tell your bank about it in advance. A brief phone call explaining that you'll be depositing the proceeds from a property sale or transferring funds to close on a vehicle can prevent an automatic hold that would otherwise freeze those funds for 3 to 5 business days. The advance notice doesn't guarantee anything, but it gives the bank context that the automated system doesn't have. Context is what separates a held transaction from a processed one. Turn on account alerts today if you haven't already. Set notifications for deposits, declined transactions, large withdrawals, and balance thresholds. If something happens to your account, if a restriction is quietly applied while you're going about your week, you want to know about it immediately, not days later when you're standing at a register with your card in hand and a payment that won't go through. Seriously consider keeping accounts at 2 different institutions, not because your bank is untrustworthy, not because you need to move your savings somewhere else. Just because having access to money at a second bank while a compliance review plays out at your primary one can mean the difference between a manageable situation and a genuine emergency. A secondary account with even a modest balance gives you options. When your account is frozen and your rent is due tomorrow, options are everything. Do you actually keep your contact information updated at your bank? Address, phone number, email, or are some of those details out of date right now? Be honest in the comments. I think the answer is going to surprise a lot of people watching this, and it might be the most important thing you check today. One more topic that needs to be covered directly, because it's already happening. Every time a major banking regulation creates public confusion and anxiety, a wave of fraud follows immediately behind it. Scammers track this news. They know what the compliance notices look like. They know what language banks use, what the formatting looks like, what the urgency level is. They copy it, and they use it to reach people who are already anxious about their accounts and expecting to be contacted by their bank with documentation requests. Your bank will never call you unexpectedly and ask for your account password, your PIN, or your full social security number over the phone. They already have that information. They do not need to verify it by asking you to repeat it back. Your bank will never send you a text with a link asking you to log in and verify your details immediately. Your bank will never tell you that your account will be closed within hours unless you act right now. Real compliance requests come with reasonable deadlines, days or weeks, not hours. Your bank will absolutely never instruct you to transfer your funds to a separate account for safekeeping while a review takes place. That specific scenario is always, without a single exception, a scam. If any communication you receive, by phone, text, or email matches any of those patterns, treat it as fraudulent regardless of how official it looks. Hang up, delete the message, then contact your bank using the phone number printed on the back of your physical debit card. That is the only verified channel. Everything else is potentially compromised. The bigger picture here is this. The banking system is not trying to punish its customers. Federal regulators are responding to real problems. Financial crime, fraud, money laundering, that cause real damage. The issue is the mechanism. Automated compliance systems are calibrated to catch everything potentially suspicious, and that calibration inevitably catches a much wider net than intended. When the system flags a routine deposit from a regular client, it isn't making a judgment about that customer. It's comparing a number against a pattern. The system doesn't know the context, it doesn't know the history, it doesn't know that the deposit is legitimate, it knows the deviation and it responds to the deviation. The customers who navigate this environment without major disruption are not the ones with the simplest finances or the fewest transactions. They're the ones who understood what the system was looking for and made sure their accounts were positioned to pass through it cleanly. Updated contact information, documentation ready in advance, large transactions flagged proactively, alerts turned on, a backup account available. That's the full picture. That's everything you need. You now have information that most people won't encounter until something has already gone wrong. Use it today, before the system reaches you, because the only version of this situation that doesn't cost you money and stress is the one where you were ready before it started. If this gave you something genuinely useful, subscribe so you don't miss the next update. Banking rules keep evolving, and staying informed is one of the most practical things you can do to protect your financial life. Share this with anyone who has a bank account, which is to say, share it with everyone you know. The gap between the people this disrupts and the people it doesn't is almost entirely a gap in information. And now you have it.